Benjamin, are you there yet?
Yes, we are here.
Great. The stage is yours.
Thank you. Thank you, Marcel, for the warm welcome, and also from my side, a warm welcome to everyone to the panel discussion, Institutional Adoption in 2021 and Beyond. My name is Benjamin Schaub. I'm a consultant at Tech, which is a blockchain consulting firm that was recently founded by the Frankfurt School and by Plutoneo. For our panel discussion, I would like to welcome Maximilian von Wallenberg for Börse Stuttgart Digital Exchange, Seamus Donahue from MetaCo, Michael Shalov from Fireblocks, and last but not least, Konstantin Katz from the International Token Standardization Association. So now, before we get into the discussion, I would like to ask everyone to introduce themselves briefly. Maximilian, would you please be so kind to start?
Of course. Hi, Max von Wallenberg. I'm the CEO of Börse Digital Exchange, BSDEX for short. It's the digital asset trading venue of Stuttgart for both retail and customers, especially on the institutional, seeing a lot of uptick the last year or so. So this is going to be a great panel to talk about that.
Seamus, you next, please.
Hi, yeah, Seamus Donahue. I'm the VP of Strategic Alliances of MetaCo. We're a Swiss company that provides a solution called Harmonize. It's a single platform to orchestrate all your digital asset backends. It's available as a SaaS or on-prem. It includes basically a full wallet system, the ability to interact and manage multiple other wallets, ours or third parties, can be deployed in hardware or software. It has the ability to manage sub-custodians, a full order execution management, so to interact with DeFi protocols. Really designed a full stack solution that enables a bank to have a single point of integration and then grow with agility their solution going forward.
Thank you, Seamus. Michael, if you would.
Yeah, so my name is Michael Shalov. I'm the CEO and co-founder of Fireblocks. Fireblocks is an infrastructure provider for institutional companies. We do multiple things. The first thing is we provide custody technology for the biggest of institutional clients, from banks to exchanges to hedge funds. We also have the Fireblocks network that currently connects 360 or 70 institutions to basically do settlements. It's the biggest asset transfer network right now in the digital asset space. And on top of that, we also enable people to access the more advanced capabilities, from DeFi to staking, and basically making sure that we bootstrap and accelerate them into the digital asset adoption.
Thank you. Konstantin.
Thank you, Benjamin. Konstantin Katz from ITSA. ITSA is a non-profit association based in Berlin. We are focusing on the development and implementation of market standards for the crypto asset space. So far, we have 3 standardizations in place. One is a digital token called ITIN, short for International Number. Secondly, offer a crypto taxonomy called the International Token Classification. And third, but not last, we have a token database called TokenBase that brings together all the data from the identification of the tokens out there with the classification data from the application of our work, and also market and blockchain analytics data.
Perfect, thank you. So I think it's important to establish common ground for our discussion. So I would like to know, when we talk about a financial institution and institutional adoption, which financial institutions are actually adopting and what are the key drivers for that? Who would like to shoot first? Michael, you can go ahead. Yeah, sure.
Yeah, sure. So not to, I guess Max can basically represent their internal adoption, but I think overall as a vendor that looks at the infrastructure level, we see it across the board, right? And back in the days, I think a lot of the hedge funds, a lot of the market makers, a lot of the crypto native exchanges were basically spearheading it. But we're seeing in the last year or so, I think what we've seen is a very strong emergence from the neobanks and the and the sort of big fintech players. So clearly PayPal, Revolut, a lot of the Square, a lot of the people in that category, which essentially rushed into the market, launched successful offerings, and when you look at their public reports, you see how much money they are making on the back of offering it to retail clients. On the other side of the spectrum, we're really seeing the tier one banks, and also in the US, basically the tier two banks stepping in and starting to play in this market. So the adoption over there is progressing, right? I mean, a lot of people have seen the announcements from Bank of New York Mellon and such, but those are clearly a bit lengthier projects that basically from start to until the point where they launch, it can take more than 12 months.
Thank you, Michael. Maximilian, would you like to elaborate on that?
Sure. I mean, I think there's like sort of the market is split in two on the institutional side. The one side is really institutions trying to get like exposure to the asset class, right? This is insurances, pension funds, even trading desks, et cetera, that want to have a proprietary exposure to invest in crypto. And that's mainly kind of the 1-2 coins, that's Bitcoin and Ethereum, right? And then you have like the B2B2C players like brokers, banks, et cetera, that want to offer or enable their customers to start trading crypto. And I'm saying trading here because that's more of a, not really a kind of a necessarily buy and hold investment, but more of a trading instrument, right? So, and we see it across the board with Börse Stuttgart, like we're being approached, every day from new customers, institutionals that really want, kind of a German partner here. And I think regulation is stepping up as well, such that now we're really having an asset class that, like large institutions are able to go into and build exposure to.
Thank you. Any additional comments?
Yeah, I would just add, I mean, I think what we're seeing, I guess, echoes what both Michael's mentioned earlier, saying that there's different types of firms moving. We have the very agile firms move. And I think what we're seeing now is all those slow moving incumbent, particularly the banks, which are very much like aircraft carriers. They take a long time to turn. Once they start turning, they're very much going that direction. I think we're seeing maybe a year and a half ago, we had a lot of the kind of pioneering banks that we work with, like the Standard Chartered, the Northern Trusts, and BBVAs all moving. But now I think there isn't a bank we speak to that doesn't have some plan in the works now to do something with digital assets, primarily focused on crypto custody. And I think they're responding to all those more agile firms. They see basically either a Coinbase, doing their IPO at valuations that is the envy of every bank, or other firms that are clients. So they potentially, if they don't respond with this, there's no longer the opportunity to sit on the sidelines because it potentially lose business. Business will go away to crypto natives that are kind of encroaching on their turf, or other banks that have been leading the space. So I think all banks are looking at this. I'd say so. Every slow moving incumbent also is looking to get into this very fast moving asset class now.
Thank you, Seamus. So when we look at digital assets that are driving the adoption, then at this point, it is quite obvious that the market is heavily dominated by crypto assets. So I would like to know from you, how might this change over the following years, and which role will security tokens play for that? Who would like to start? Yeah, I mean, I can actually say that, interestingly enough, although we all look at clearly the main driver right now is Bitcoin and Ethereum, right, or the allocation into those asset classes. When we look in terms of the activity in our network, so I actually don't have the data for May, but for April we settled $120 billion of basically settlements through the network, and 30% of it is stablecoin, right? So it's no longer Bitcoin and Ethereum. Over something around $35 billion of a stablecoin volume that was exchanged between institutional parties. Now, the beauty of it is that I think that that sort of, although it's not directly related to security tokens, but it is already a tokenized, it's already a tokenized asset class.
And what I think we are actually going to see quite shortly, especially as the banks are stepping in, a lot of the projects that we are doing with the banks are basically dual projects in which they not only want to do Bitcoin, Ethereum, but actually they want to mint and tokenize securities. And the fact that you have already the stablecoin leg, this is really what provides them the efficiency to essentially do the DVP and to not only just say, oh, I have a representation of a security token on the blockchain, but I actually have all the mechanisms that I need in order to create the efficiency in the system and to essentially reap the advantages from what this thing has to promise from a technology standpoint compared to the old way of doing clearing. And I think this is one of the things that the traditional and the incumbents are really interested in.
Okay. I would add, basically, I think we're seeing most banks build their business cases around cryptocurrencies, largely because you've got identifiable asset class, the size of the asset class. You can build, basically project revenues. At extreme, everyone knows that the tokenizing security is a big opportunity. I mean, you're talking about multi-trillion-dollar markets, basically, which eventually all these markets will be tokenized. The question is when, because there's still no liquid secondary market in securities. But I think things like payments are an opportunity of their own. As Michael says, tokenizing payments has grown rapidly. It was 10 billion at the start of last year. It's almost 100 billion now. I think, when you think about banks' earnings, 40% of the earnings come from payments. So this is basically an area that's ripe for, let's say, reinvention or potentially even disintermediation. So I think everyone look at a DM or other type of stable coins launching, you could see some dramatic impact on the payment space. So I think the first use case beyond crypto is really tokenizing payments as an opportunity on its own.
Thank you. Additional comments?
Well, I think that one of the main roadblockers for digital securities is indeed the lack of a trading venue, a fully regulated one. And I'm pointing in the direction of Max here, because we are all waiting for a fully regulated security token trading venue. And the question is, when will it come? And when can we see this roadblocker being taken from the streets?
Yeah, I think at the moment regulation is not quite clear, right? So at the moment we can't offer it. Obviously, we're very actively looking towards this space as kind of a next big step. Where we want to take our business. On the other hand, regulation is moving quite slow on that end. There are a lot of work streams, but it's not very clear as to when that will happen. And I also might say for us as an exchange, we're obviously interested in trading volume, right? So there's no point to list securities that don't really bring necessarily a lot of volume. I think what's very interesting is, for example, looking at the explosion of the BNB, the Binance token price, right? If you look at really how people are looking at a exchange fee token as a sort of a proxy investment into that firm, because basically you don't earn anything of the underlying. But it's sort of an investment that mirrors a security token, and we see substantial trading there, right? So I think this already shows that if you have a very valuable underlying business model and a good brand, security tokens can actually work with significant volumes on exchanges.
Thank you. You already mentioned regulation, so I would like to use the next minutes to talk a bit about some obstacles that you see in the market and which would need to be overcome for further adoption. So when it comes to market standards, for example, a big topic in trading is having proper identifiers. So, Konstantin, maybe you would like to address this question and what's your view on the market, and especially maybe also the view of the members of ITSA?
Yeah, sure. So, as you said, identifying digital assets is a big topic, and we have made some big progress here. So, ITSA itself is offering a digital token identifier, as I mentioned before, and in order to properly identify tokens of any kind, Bitcoin, Ethereum, or also DeFi tokens. Because what we've seen in the past is that the symbols BTC for Bitcoin, for instance, or ETH for Ethereum are just not sufficient, because they are chosen freely by the issuers, and often it comes to duplications, or they are also used for scams. So I think as one building block for accelerated institutional adoption, we clearly need market standards such as identifiers, but also standards for the classification of different digital tokens. And here, I think the MiCA regulation is already a very good proposal from the European Commission, but it still lacks some clarity on various points. For instance, it lacks a clear segment for tokens like Bitcoin or the like. So I think we are on a good way there, but we still need to refine and help also the regulators with input and recommendations to create a proper market environment that benefits all stakeholders.
Thank you. Would someone like to elaborate on that? Okay.
Yeah, I think everyone is pro market standards and transparency and also regulatory safety, because what we can also see in various other countries outside the EU is currently that the market environment and regulatory guidance is not properly cleared and guaranteed. So this is also one point that might hold back institutional investors.
Okay, perfect. So, as we said, we already were talking now about regulation a bit. Another point that has been come up in the recent months is, well, not in the recent months, but particularly there is the electricity consumption of Bitcoin. And are you maybe some ESG criteria could stop investors, especially institutional investors, from investing in the crypto space as such? Who would like?
I think ESG is an issue that's basically, every corporate has an ESG policy now. There's a lot of green focus. To a degree, I think this is an education issue. I mean, you don't have to look very far on Twitter before you see Nick Carter responding to the latest, let's say, misinformation about the energy use of Bitcoin. I mean, at a start, it's a normative question: is Bitcoin good or bad? I mean, there's a large assumption here. Often, the negative view of this is that it's bad. So any use of electricity is negative, because the use of the existing financial industry is obviously very energy intensive, particularly when you think it's a dollar-based, global hegemonic position, the U.S. that drives that thing. So I think that's definitely, I think we've heard some board levels for some of the banks, this is an ESG issue. Potentially they may look past proof of work and look proof of stake as something that's more environmentally friendly. But I think these are more short-term concerns. I do think though that we will see some of the recent news out of China potentially cracking down on mining and moving some of that mining capability out of China into potentially much more green resources. I think there's much higher utilization of renewable energy in North America and outside of China. Could actually be very positive. So I think that you could see the narrative change quite a bit there, as well as potentially bring about less concern about China control and more decentralization in the network in general. So I think there are some issues from the ESG perspective, but I think they should pass over time.
Okay.
Yeah, I mean, just to add to that, I think that the proof of stake, which is currently the work of all the other blockchains, with the exception of Bitcoin, right? Both Ethereum and Cardano, Polkadot, and all those blockchains, they already sort of, solved or on the verge of solving this problem, and that's like in the focus of what they do. And with Bitcoin, I'm not sure if it will ever be possible to move it out of proof of work. But if there is an area where the regulators need to step in, is really there is no reason why 100% of the Bitcoin mining will not be on a renewable energy, right? And this is, I think, just a matter of maybe if the regulators need to focus on an area that is important, is that this is the area.
Yeah, I also think if you look at, we shouldn't always say Bitcoin is crypto, right? If you look at institutional adoption, we can look beyond Bitcoin also into other cryptocurrencies like Ethereum. And these are obviously a lot greener in terms of the proof of stake algorithm that's underlying. So I think what really makes institutional adoption work, if we go beyond just kind of treating crypto equals to Bitcoin, but also to other currencies, to security tokens, to potentially the entire DeFi space, where incredible stuff is happening. And we're looking at kind of a time frame of 12, 24, 48 months out, and I think a lot will happen that might even replace Bitcoin as like the top cryptocurrency, right?
Thank you. Okay, then let's now look for the final 4 minutes into the future and elaborate on what are you expecting from this year and maybe for the next 2 years, looking at the crypto space. Seamus, would you like to start?
Sure. I mean, I think we're obviously going through a little bit of tough time in the retracing the market. I think that'll pass. I think the upward trend as the network grows will continue to sustain itself. And I think what we're seeing is we're past the kind of like, we're in the acceleration phase of building this space. We've seen emergent firms, let's call them, or native crypto firms like Coinbase redefine a category, particularly in terms of their size. I think there's obviously the very large raises going in this market mean some of the digital native firms really have a very strong footprint to build from. And I think those incumbents that are still cautious in this space could very easily be left behind. I think there's an urgency that you can no longer sit and wait and try to decide whether you're going to get involved. You have to get involved in the space. I mean, in the end, everything will be tokenized, whether you start with crypto or start with tokenized payments or another. I think there needs to be firms, either given the pace in large, let's say, legacy firms of change, they really need to figure out how to innovate in the space because the pace of innovation outside them is rapid and accelerating. And I think this asset class is moving to the center stage, and I think banks need to embrace it. Otherwise, they become less and less relevant.
Thank you. Other thoughts?
Yeah, I think like when these large institutional players start to decide they want to move into this asset class, like we're talking about like 12 months or even 18 months of time lag in terms of making the decision to really kind of, connecting to an exchange or, starting to offer this as a service to their customers. And this has happened, right? And it didn't, just started to happen, but maybe like 6 months ago, right? So I think the next 6 to 12 months, we're going to see a plethora of like very large institutions to start offering crypto assets as, to their customers or as an asset class in general. And I think this will be an exciting time to be in the industry for sure.
Yeah,
thank you.
I think that we will see in the next, beyond everything, I totally agree with everything that was said so far. I think that the two areas that we should see an interesting acceleration in the next 12 months is first and foremost really around payment and the usage of stablecoins. I don't think people are actually going to wait for CBDC to really take advantage of this really phenomenal technology, and we're going to see it across the board. I think in the first area will be B2B remittance and use cases around international payments, but from there it will quickly escalate into the retail hands. And the second area is that I do think we're going to see more acceptance or sort of steps where DeFi is actually being adopted by more and more regulated entities. And I think that there is an interesting work that is being done over there to eventually make it compatible with, from both the regulatory side and from the DeFi side. I think people are somewhat thoughtful in terms of how to bridge the huge gap that is currently exists between those two frameworks. But at the end of the day, this is, I think, the most interesting area from a traditional standpoint where most of the innovation is actually happening.
I fully agree with you, Michael. But I think as one of the milestones that we have quite ahead of us and which might happen in quite short time is of the first Bitcoin ETFs in USA. And we already saw the launch of 3 Bitcoin ETFs in Canada at the Toronto Stock Exchange. I think the convergence here from the native crypto space to the traditional financial sector is now already happening. And we can see a big step there forward. And I think this will have a huge impact also on the market again, because it will hopefully bring a lot more institutional players to the field and also fresh money. And I think then at a later stage, we hopefully also see the integration of DeFi. But I think this will take some time because it's far more complex and it brings much more risk with it.
Thank you. So we have one more question from the audience that we can address. And I think I know Maximilian's answer to that question, so I would like to answer Michael and Seamus first. The question is, how do you see German players positioned to become market leaders in Europe in the crypto space?
So I'll start first. I think that clearly Germany built right now a name for itself to have the clearest regulation in the European market, and it basically drew a lot of the efforts right now that we're seeing in Europe. Even major international banks, in many cases, they would say, okay, the first entity or the first area where we want to spin in our activity is Germany. So whether it's basically internationals that are going into Germany or German entities that are going outside, I think that in this game, the first movers, they not always win, but they have a higher likelihood of winning. And therefore, I think it really sets the stage for the German institutions to front run some of their European competitors.
Okay.
Yeah, 100% agree. I think it's all about the BaFin thing. I think it's all about the BaFin. BaFin's the leader in the space, and it's given a clear roadmap for the banks to move. And I think that really gives them the advantage.
Okay. So thank you. We have to wrap it up, unfortunately, already. Thank you, Maximilian von Wallenberg from Börse Stuttgart Digital Exchange. Seamus Donahue from MetaCo, Michael Shalov from Fireblocks, and Konstantin Katz from ITSA. Thank you.
Thank you, guys.
Thank you. Goodbye.
Yeah, bye-bye.
Thank you to all the panelists, and thank you to you, Benjamin.